anyone who doesn't have energy in their portfolios is, I think, very much running naked. Once you enter an energy crisis, there really is nothing that goes up except for energy. It's just like energy is the kryptonite of the system. Once that starts going up, everything else dies. The bonds die, the equities die, the precious metals die, everything dies. Energy kills everything. It's the dark force of our economic systems.
Today's episode is made possible by Days to Expiry, a tool that I co-created with Florian and Lovis to help navigate the complex world of options trading. As someone who has extensively used options to enhance their long-term investments, I can attest to the importance of getting the right signals from a sea of trading noise. Achieving financial freedom is a crucial step towards personal freedom, a topic that many of our guests have already spoken about at length. To learn more about how I am working towards my own financial goals, visit daystoexpiry.com.
Louis, welcome back to the show.
Thanks
you're
for having
one of
me.
the few people. Yeah, super excited to have you back. Thank you.
Thank you.
It's been pretty exactly a year ago since you were on. This was unintentional, but this is how quickly time goes by. Yeah.
Wow. I would have thought, if you'd asked me, I would have thought it was 3 or 4 months ago, honestly.
Yeah, same.
Yeah.
I'm shocked.
Yeah.
Well, so you're one of the few people we know who consistently looks at the world, not necessarily through headlines and narratives, but through capital flows and currencies and long historical cycles. And in our last conversation, we talked about volatility as something to be understood, not feared. And since then, you've laid out a thesis that China, then and before, I would say, but you've laid out a thesis that China, quietly and often misunderstood, may have been the single most important macro force of the last decade, and that a major regime shift is now underway. I think we're seeing that play out in real time. So today, we want to go one level deeper, beyond what's happening in the markets and into what shifts mean for how people position themselves financially, professionally, and personally in a world that's clearly changing. So with that, it's great to have you back one more time, and welcome to the pod.
Thanks. If I said volatility wasn't to be feared, it must have been a quiet day, because today, with the oil price trading in a $40 range, I don't think I'd be making that statement today about volatility not being feared, because it's been pretty hectic the past 72 hours. So I guess a year ago it must have been quiet when I made that statement.
Yeah, Louis, so just to add to that point, we were going to have you on a month ago, right? And so I had all these questions.
Yeah, I'm so sorry about that, by the way, guys. I'm really sorry about canceling on you guys at the last minute. Really apologize.
No problems at all, really, no problems at all. But I just wanted to draw attention or highlight the fact that I went through the questions that I had prepared for you from a month ago. And today, I'm going to have to nearly change all of them, right? So I think that kind of shows us how fast things are moving. So with that as a frame, and take as long as you like, what is on your radar at the moment with all that's going on?
Look, I always start off with the premise that economic activity is energy transformed. And that, in our framework at GAFCAL, we start off with the idea that if you can figure out where energy prices are going, where long-term treasury yields are going, and where the US dollar is going, that's 90% of the battle. That's going to give you the broad direction of everything you need to know, whether EM are outperforming or underperforming, whether growth stocks are outperforming value, whether bonds are going to outperform equities. You get those three questions right, you have a pretty clear idea of where you're heading. Now, the reality today is that the uncertainty around energy is absolutely massive. I've seen, right now we're in the middle of seeing something I've never seen in my career, which is that if you look at the short-term price of energy, I mean, obviously today it hovered between, $85 and $120. but it ended up settling around $95 by the end of the day. But if you look at the 12-month price, the future price in a year's time, you're at $65. So right now the market is essentially telling you, if you just listen to the market is telling you, yeah, we have a short-term energy problem, but this is going to be short-term. This isn't going to last. It's definitely not going to last 6 months, and it's definitely not going to last 12 months. And if the market is right on that assessment, then frankly, we don't have that much to worry about. However, I question whether the market is right on that assessment. And how the market can be so confident to essentially say that if you look at a month ago, the market was pricing oil at $65 in 12 months' time, and today it's essentially the same thing. And so it's almost as if everything that we've witnessed over the past week in the Middle East, the bombing of the refineries, the bombing of the desalination plants, the bombing of the airports, that none of that really matters for the long term. It might matter today, right now, but it's not going to matter for the long term. So essentially, I think the market is making the bet that we will see regime shift in Iran, because I don't see how otherwise you get oil at $65 in 12 months. Because if the Strait of Hormuz stay closed, which is clearly Iran's strategy now, it's a scorched earth strategy that the Iranian regime is following. That if that carries through for a few months, there's no way that oil in 12 months' time is at $65. So this leaves you with way more path uncertainty than you had 12 months ago. Now, facing this path uncertainty, I think that the natural reaction of any investor should be to reduce risk, it's the old story. Sometimes you put the offensive team on the field, sometimes you put the defensive team on the field. And today is a time for defensive team. It's not a time to be a hero. It's not a time where you can say, well, I'm definitely confident that this is going to happen, therefore I'm going to position my portfolio in this way or that way. It's a time to reduce risk. That's what we've been doing in our portfolios. And until you have more visibility on where energy goes, and again, I worry, and maybe I'm completely wrong, but I worry that the futures markets are way too complacent about where the upside risk to energy over the next 12 months.
Louis, thanks for that summary. When you say you reduce risk, you're reducing risk in your portfolios. Does that mean buying protection on both sides, or does that mean just degrossing, or how would you look at something like
just raising cash, degrossing? But look, the book I wrote in 2021, I hate to be here plugging my book, but I'll do it anyway. The book I wrote called Avoiding the Punch started off with the premise that the old balanced portfolio that had worked so well for 30 years of being 60% equity, 40% bonds, and that when you wanted to reduce your risk, you reduce the equity and you increase the bonds, that portfolio essentially no longer worked. And that in the inflationary age in which we'd entered, you needed a new portfolio that was essentially 60 equity, 20% gold, 20% energy. Now, to answer your question, what does de-risking mean? For me today, it means reducing the equities. It actually means reducing the precious metals. And right now, probably increasing energy. Now, I came into this with a fair amount of energy, so I don't feel a need to add more here. But anyone who doesn't have energy in their portfolios is, I think, very much running naked. And so if you don't have energy, and we do enter into an energy crisis, once you enter an energy crisis, there really is nothing that goes up except for energy. It's just like energy is the kryptonite of the system. Once that starts going up, everything else dies. The bonds die, the equities die, the precious metals die, everything dies. Energy kills everything. It's the dark force of our economic systems. So anybody who doesn't have de-risking portfolios, it all depends what your starting point is. If you came into this with lots of bonds and lots of equities, you've got the wrong portfolio. If you came in with lots of equities and no energy, you also have the wrong portfolio. So it all depends where your starting point was.
And with energy, are you talking about oil only, or across the board, like natural gas, coal, uranium?
solar.
I don't know if it's my side, but I can't. Lois, can you hear? Can you? Okay, so it's.
Jay, you're cutting out a bit. Try. Just repeat, please. No, I can't hear you at all right now.
Can you hear me now?
Just for the audience, Jason's in China trying to make this happen on a cell phone.
It's the CPC blocking him. He was probably going to ask something about Taiwan. I'm kidding.
Okay.
I'm teasing.
Can you hear? Can you guys hear me now?
Cheap prepaid cell phone data plan, probably. Well, my line of questioning on this topic is not as strong as Jay's, so.
Well, we can move to something else if you want while Jay joins us back.
Well, so I mean, looking at more because I'm not the portfolio guy. I'm like the small business owner who is waiting for his third child to be born in 2 months.
Congratulations! How exciting!
Thank you.
Do you know what you're having?
Yes, my third boy. Yeah.
There's a place in heaven for mothers who have 3 boys. 3 little boys. 3 little boys at the same time is that's tiring. Well done. Welcome.
Yeah.
Well done. Well done. It's a great start. 3 boys is a great start.
I love every minute of it.
Keep going.
You're right. It's very tiring, but I also love every minute of it.
Yeah.
But so I'm just trying to figure out, like, with all this stuff that's going on, right? I mean, we have this still fairly new war in Iran that could, everybody's like, oh, it's not different this time. And I think that goes to, the price of the oil futures in a year out, where it's like, we've seen lots of these conflicts in the Middle East, and after a little while, nobody cares anymore. But this only goes well for so long, and eventually there is one that is different, right? And
So I think to your point, I'm sorry to interrupt, but I think what you're highlighting is super important. And I've been talking about this with a number of clients over the past 72 hours, is that, so I'm 52 years old, and I was part of the generation that essentially was taught to fade every geopolitical, to fade every exogenous shock. And the reason deep down you faded every exogenous shock is that when something bad happened, because we lived in a broadly deflationary environment, each time something bad happened, the fiscal authorities and the monetary authorities could step in, print a bunch of money, spend a bunch of money, try to get things going again, and in so doing, put a floor under asset prices. This was very visible during COVID, right? COVID was the ultimate exogenous shock, something that nobody had in their models. It was the sort of thing that came out of nowhere. And from that exogenous shock, you saw more fiscal stimulus and more monetary policy stimulus than you'd ever seen on record. So much liquidity pushed into the system. And so stocks collapsed on the exogenous shock and then ripped back up on the back of all the money that was injected in. Now, what's fascinating today, and why this might be different this time, and I know these are the most expensive words in the English language, but why things might be different this time is that we are no longer in a broadly deflationary environment. We are now, inflation is running above the comfort zone of central banks in the US, in the UK, in Europe, in Japan. The one place where inflation is actually far below what the central bankers would wish for is China. China has its own unique set of challenges and circumstances, which we can touch on if you want. But leaving China aside, everywhere else in the world is now in an inflationary environment. And so now you get this new exogenous shock, this Iran crisis. And by the way, this Iran crisis is an inflationary shock in itself, not just because it pushes up energy prices, but also because it triggers massive supply chain dislocations. A third of the helium in the world that is needed to make semiconductors comes out of the Middle East. India, Pakistan have already said that because of lack of urea, they're going to be cutting back on their fertilizer production, and without fertilizer in these countries, you're going to get disappointing harvests, and with that, higher food prices, etc. So the big problem with all these things is we now live in such a globally integrated world that you pull on a string and you're never quite sure what's going to end up happening on the other side. That was the big lesson of COVID, right? The supply chain dislocations that were unleashed by COVID. So my big fear is this is an inflationary shock to our system. No doubt about it. It's an inflationary shock to our system. On the back of it, right now, I think the NASDAQ, the S&P are 2% off their all-time highs because market participants are assuming, oh, you know what, this is a shock. We'll get easier fiscal, we'll get easier money. So I'm going to buy the dip. I'm going to buy the dip even before there is a dip. And so I'm going to step in and fade the geopolitical bad news and just jump in. But again, we are now in an inflationary environment. And so this time around, what you're seeing as this bad news hits, bond yields don't go down, they go up. And if you turn around and the Fed cuts in the face of rising inflation data, bond yields will go up even more, and at some point that starts hurting equities. So the bottom line is, yes, for 30 years, fading exogenous shocks, fading geopolitical events made perfect sense. Because we were in a deflationary environment, we no longer are. The one country that can step on the gas, that can look at this and say, you know what, this is going to hurt my growth, I'm going to therefore stimulate further, is China. Because China, inflation is on official data at 0, but it's probably even lower than that. China is the one place that really has no policy constraint at this stage. So if you want to buy the dip anywhere, probably buying it in China makes more sense than buying it elsewhere. But the bottom line, I think, for investors is to remember that fading geopolitical risks makes sense in a deflationary environment. It might not make sense in an inflationary environment.
That makes a lot of sense. Thanks for breaking that down.
No.
Well, but who do you think is hurt the most if, when these oil prices explode? I mean, you said it settled today at 95. That's actually, I looked at it last night before going to bed and it was at like 125 or something.
Yeah, no, literally today there was a $40 price inflation. Yeah. Oh no! Imagine being the hedging desk of an airline or a chemical company. Spare a thought, even a prayer for those guys when oil moves around by $40 in a day. How do you run a hedging program? You have to feel sorry for those guys. Sounds like we got Jay back. Hey, bud. Anyway, to answer your question, who gets hurt the most? It's look. Obviously, you can go through the list of the big oil importers, and whether you're India, whether South Korea, Taiwan, China, Japan, European Union. So the first step is you could say, okay, oil prices are going up. Who gets hurt by the higher price? The problem this time is, as we're seeing for Europe, it's not just a question of paying more for stuff, for oil, natural gases, whether you can get it at all. And this is where things are, if you look at different countries, the profiles are very different. So if you take China as an example, around 18% of China's energy consumption comes from oil. In the United States, it's 35%, to put in comparison. So the U.S. consumer is actually going to get hurt more than the Chinese consumer by the rising oil price. Now, that 18% in China, then the question becomes, can that get compressed? And interestingly, you can get compressed some, because some of it does go to transportation, but actually a lot of it goes into petrochem products and into industry in various ways. While in the U.S., a lot of that 35% does go into transportation. So after that, it's, to answer your question, who gets hurt the most, you really have to go country by country and look at the breakdown as to how the countries, their energy mix and what they're going to do going forward. So one of the big headlines in Asia is how Taiwan only has 11 days of natural gas. And all of Taiwan's natural gas comes from Qatar. So if the natural gas doesn't come from Qatar or Saudi Arabia or anywhere else, what happens to Taiwan now? If you wanted to be a super negative Nelly, Chicken Little, the sky is falling, etc., you could say, oh, well, in 11 days, Taiwan's going to run out of electricity. You're going to have brownouts. It's going to be terrible, except that I don't think that's going to happen. Instead, what's going to happen is Taiwan's going to burn a whole ton of coal. They're going to replace the natural gas that they use for electricity with coal, and they're going to burn a ton of coal. They have coal-based fire plant. They have a little bit of coal reserves. And in the meantime, right now, they're probably ordering more coal from Australia, more coal from Indonesia, and they're going to be shipping that stuff in, and they're going to burn the hell out of coal. So Now you could say, well, that's not great news for the lungs of babies in Taipei and in Kaohsiung, and true, it's not good news. This skyrocketing and the fact that you can't get natural gas and can't get oil means that you're going to have a lot more coal burning in China, a lot more coal burning in South Korea, a lot more coal burning in Taiwan, because between the problems that pollution creates 20 years from now and not having electricity right now, every politician will say, I'll take electricity and we'll deal with the pollution problems 20 years from now. So,
of course.
So again, on who's going to be the big losers, I think coal is going to be a big winner. Coal in Indonesia, coal in Australia, coal in South Africa, because Europe is in essentially the same predicament with the natural gas. So Europe is going to be shipping Polish coal. It's going to be shipping South African coal. Those are going to be the big winners. The big losers, well, look, the first big losers in a war is the people who participate in the war. So the big losers right now is the Middle East. They're getting their buildings blown up. They're having the desalination plants taken out of the grid. They're having their refineries explode. That's your big loser right there, and it's just terribly sad to see.
Yeah, I agree.
Louis,
And,
just
I mean,
before I got cut off, I actually wanted to ask you with when you say get exposure to energy, you mentioned coal now. Are you talking about like across the board with uranium, natural gas, coal, maybe even solar? How do you get exposure to something as broad as energy? And also, like, do you make sure you get equities, or do you look at the futures prices? How would one get exposure to energy if they're moving away from bonds?
So the answer is yes. Yes, you do it all.
To everything.
I think you do. I think you do everything. I think you take a broad-based approach. Well, okay. Let me backtrack. It all depends how much time you want to spend on this and how much effort you want to put into getting your energy exposure. If you want to spend a lot of time, you could say, you know what, I'm going to go out and buy refiners. Nobody's building new refineries, and Russia and Ukraine keep blowing up each other's refineries, and now Iran and the Arab countries are blowing up each other's refineries. So we're moving into a world where today crack spreads are absolutely through the roof. And usually you see these spikes in crack spreads every now and then, and it never stays up. It always comes back down. But conceptually, crack spreads have been very high all year. And conceptually, I think they're going to stay high for quite a while. So you could say, okay, I'm going to buy refinery stocks, Cenovus, Valero. Obviously, you want to try to buy refiners whose refineries aren't going to get blown up, because if they get blown up, that's not as good. So that's one way to play it. I've also been buying, to answer your question, I've been buying the oil stocks of oil companies that aren't in the Middle East. So think Petrobras, think Ecopetrol, think YPF in Argentina. These guys typically do well. So Petrobras is a perfect example of this. The marginal cost of producing a barrel for Petrobras is actually quite high because they're producing it out in the in offshore rigs. And so when below $50, Petrobras really doesn't make that much money. But if oil goes to $90 and stays there, Petrobras absolutely mints cash. And same for Ecopetrol in Colombia. So you have these stocks that are naturally geared to a higher oil price, and therefore are not a bad hedge in a portfolio. You can own Petrobras, you can own an Ecopetrol. They're very high dividend yielding stocks. They yield way more than government bonds do today. So you get a 5 or 6 or 7, 8, 9, 10% dividend yield. And same with PetroChina in China. You capitalize these, and then if the oil price shoots up, then these guys actually share prices go through the roof. So that's a second way to play it. I do have a little bit of solar, actually. I have some solar panel manufacturers in China. For me, that's sort of a contrarian trade. I think they've been absolutely crushed. And the reality is solar actually does work in a lot of environments. And when you look at where the demand for energy around the world is going to come from, the growth in demand for energy is going to come from in the next 10 years. It's going to come from Africa. It's going to come from Southeast Asia. It's going to come from India. It's going to come from places where actually solar makes sense. Solar doesn't make sense in Germany, and it doesn't make sense in England. And it doesn't make sense here in Canada, where I'm dialing you from. But it makes a whole lot of sense if you're living in Algeria or if you're living in South Africa.
Well, and especially if oil's 180 bucks a
and
gallon,
then
makes a lot more sense, right?
Yeah, and then that too. Now, uranium, basically, uranium used to be a dirty word up until Russia started to invade Ukraine, and then everybody everybody except the Germans. Hate to pick on you, Louis, but everybody except the German was just remembered. Actually, we have a way to produce massive amounts of electricity, and in a clean way, and in a geopolitical way that in one container we can store 100 years worth of uranium. So France, that had been closing its nuclear, started to revamp it. Same with the U.S., etc. So all this to say, there's many ways to skin a cat, and you can build yourself an energy portfolio that is both well diversified and hopefully benefits from different structural growth trends.
So, Jay, do you have a follow-up, or can I shift to trade war?
Please shift. I thought that answer was pretty good. I've got a lot of homework to do after the call.
Nice. So an interesting thing happened, right? The Supreme Court here in the U.S. struck down some of the tariff rules that the administration had put in place. But then, of course, it was followed up by something else. And, it's too tiring to follow it.
But that's so true. That's so true.
But so, besides this kinetic war that's going on now, all of a sudden, we still have a trade war, right? But then at the same time, I also know that China's trade surplus has never been higher than 2025, right? So how do you square that circle?
Look, China's trade surplus, which is enormous, it's more than 100 billion a month now. And to put things in perspective, it's roughly 1.3 trillion a year. Put things in perspective, that's the GDP of Saudi Arabia. So China's trade surplus is the GDP of Saudi Arabia. It's mind blowing. You've never seen anything like it in the history of modern markets. And I think it comes down to one of the biggest pricing anomalies in our world. And I know Jay is in China right now, so he can probably testify to this. But I think we talked about this a year ago, that the biggest wrong price, if you look around the world and you say, what price is completely out of whack? What price makes absolutely no sense? It has to be the price of the renminbi. The currency in China is just so cheap relative to any other major currency, and that's what has helped underpin this massive trade surplus. And it's not just that. China's had tremendous productivity gains, and it's moved up very, very quickly up the industrial value chain. There's been lots and lots of things happening in China, but with all these great things that have happened, these productivity gains, these industrial gains, etc., the currency should have strengthened normally. And I think it was kept artificially low because China was in this trade war with the United States, because China felt the U.S., this is what we discussed a year ago, the U.S. is out to get me, and I have to cushion my economy against U.S. attacks. And one of the ways to do this is to build up my industry. I thus have to protect my industry. One of the ways you protect your industry is through an undervalued exchange rate. So that's where we've been. That's how we got here. That's where we are today. Looking forward, I think what's fascinating is the renminbi is now up 7 months in a row. And so you have started to see a shift in FX policy, which I think corresponds to a number of things, not least of which China's desire to actually have a better relationship with the United States. And on this front, Xi and Trump are supposed to meet 4 times over the next 14 months. Trump is coming to China in a few weeks. And everything is being done for them to get along and to announce so China's going to buy 500 Boeings, and deep down, I think what Xi Jinping really wants is for the U.S. to say, fine, BYD can open factories in the United States, and Xiaomi can open factories, and Longhorn Machinery can open factories. And so if we had, and so to get there, sort of olive branch type of thing, um, renminbi appreciation is now on the cards. And for me, that's the principal reason why it's happening. And it's a super important shift for the financial markets, because for the past 6-7 years, the renminbi was sort of structurally weak. From here on out, it's going to be structurally strong, and hopefully that helps appease some of the trade tensions that we've seen.
Louis, following on from that, right, with the appreciation of the RMB, it was happening for a few weeks or months, or a month, sorry, and then after the recent events, I saw there was just a quick downdraft. But don't want to
I
play
wouldn't say
5-minute
downdraft.
macro, right?
I wouldn't say it's a downdraft. It rolled over a tiny bit, but you have to remember that over the same period, the euro was very weak, the yen was very weak, the sterling was very weak, the loonie was very weak. So it's a tricky exchange rate, the renminbi, because sometimes they manage it against the U.S. dollar, sometimes they manage it against the basket of currencies. They don't want the renminbi to shoot up against every currency. So as every currency is rolling over, they've given back a little bit. But if you look at year to date, the renminbi is, if you look at the RMB bond market, it's the best performing bond market year to date, not because of bond yields, because bond yields in China are nothing, but because the renminbi has been the strongest currency.
Mm-hmm. And what do you think? I think from a few months ago, we were really starting to see capital flowing into emerging markets. So I was just wondering if, in a world where the oil price is high, geopolitical risks are high, do you think that rotation will keep happening?
So history is not kind to this. When you get these sort of flare-ups in geopolitical risks, historically, the natural tendency of people is to bring their money home. Now, in the past, this meant people selling emerging markets and bringing money home to developed markets, because in the past, the marginal savings came out of developed markets. Your typical EM manager was a guy sitting in London or New York, looking at Brazil, looking at China, looking at Indonesia, and saying, I don't know what's going on over there. I don't like it. I'm bringing my money home. But, and this is where, again, most expensive words in the English language, it's different this time and all that. What's fascinating now is the extent to which, when you look at countries like Chile, like Mexico, like China, like Korea, you have now, 30 years later, you have deep, liquid domestic pension fund industry. Companies, corporate pension funds and government pension funds and the like, that 10, 20 years ago didn't manage that much money, but you compound, and every month people giving money to their pension funds, and then you compound that over a long enough period of time, and that domestic pension fund savings pool is now meaningful and real. So the reason I highlight this is that I think if you split the world in terms of capital, countries that need to suck in capital from the rest of the world and countries that provide capital from the rest of the world, for most of my career, emerging markets used to be the first kind. They would suck in capital because their growth was very capital intensive, so they'd suck in capital from the rest of the world. I'm not sure that's still the case. Increasingly, it's the U.S. that sucks in capital from the rest of the world, and to some extent, it's Europe as well, because our countries that used to run pretty decent fiscal policies. I know this is not going to be believable, but when I started in this business, the U.S. was basically running a primary budget surplus in the Clinton years, and I know it sounds unbelievable, but that is the truth. And so back then, when the U.S. was running surpluses, etc., they was exporting capital to the rest of the world. Now it's importing capital from the rest of the world. So all this to say, in an age where everybody says, "Oh, I don't know what's going to happen. This feels scary," maybe the default will be, "I don't know what's going to happen, so I'll go back to buying Microsoft because we'll always need Microsoft." That's one option. The other option is, "I don't know what's happening. I'm just going to bring my money home. And at least at home, my money will be safe." And if people go down this path, then actually, I don't think it'll be that bad news for most emerging markets. You still have some emerging markets that need to import capital. India is one of them. Indonesia is another. So there are some emerging markets that need to import capital. But the very big ones, the Koreas, the Chinas, the Brazils, actually Brazil still needs to import capital, but Chile, others. So after that, maybe we shouldn't split the world into EM and DM, but into capital importers and capital exporters.
So I have this, I have this secret hope, right, for this new conflict that has flared up. And that is, we've had somebody on the podcast, is Doomberg, right, who credibly says, so, depending on what you count as credible, says that, NATO basically got beat in Ukraine. And now with this conflict in Iran, U.S. is starting with depleted, what do you call it? Depleted stash, right? Depleted armaments, etc. So what if they run down all their arms, because they don't want to, probably not going to want to put boots on the ground. And then, as we know, Lockheed Martins, etc., can't really make this stuff without parts from China.
Yeah.
And what if China just says, no, thank you, right?
Yep.
Happy to trade, but not that. Right. And so is this, so hopefully, so my hope is that this is actually a path to world peace, right? if the US, which basically means NATO, can't, do these conflicts anymore that they love to do.
Look, from your lips to God's ears about world peace. Anything that gets us there, I'd sign with both hands. Here's the reality, though, is the U.S. does have some reserves in strategic minerals, into rare earths, etc. And what they will do, my fear on this is you're not going to shut the $1 trillion a year U.S. military budget because you're missing $10 billion. You're missing 10 billion tungsten. I'd love to think that that's what's going to happen, but the reality is what will get shut down first is Ford and it's GM and it's Caterpillar and it's John Deere, because a lot of these rare earths, it's needed in a lot of industrial applications, not just in missiles. It's needed in cars and in tractors and in trains. And given I'm perhaps more cynical than you are, I tend to think that there is no more powerful lobby in the United States than the U.S. military-industrial complex, because for a number of reasons, but it was very good at pushing, at either having military bases or weapons manufacturers in most of the districts. So as a result, every congressman is somehow beholden, not every, but 80% of the congressmen have in their own district as a massive employer, either the army directly, the military directly, or an armaments business. And so from there, they're all beholden to, because the spending is spread across the country very smartly, everybody's beholden to it. And so there is no more powerful lobby than the U.S. military-industrial complex. And if that means that you've got to sacrifice the auto industry to keep making missiles, they'll sacrifice the auto industry to keep making missiles, because deep down, if the U.S. stops producing rockets, then it's not the U.S. anymore.
So actually, I might have it completely backwards, right? So it could actually start like a new manufacturing super cycle for that stuff in the U.S. and the West.
It could, but at the same time, it could unleash a massive recession for everybody else.
Right.
It could unleash, again, if you're GM, if you're Ford, and you're told, sorry guys, we're out of magnets, we got to ship them to Lockheed and Raytheon, so you guys are out of luck. And then what did these guys do? They'll fire 50,000 workers, 100,000 workers, because if they don't have the magnets, then the cars are just, very, very expensive and uncomfortable paperweight.
Well, Louis, wouldn't that just mean from a longer term view that the countries that do go down that path lose more and more influence as well as economic productivity?
Oh, for sure. No doubt. And look, if you take a step back and you think at this action that's just happened in Iran, the U.S. has basically shot all of its major allies in both Asia and the Middle East and Europe in the foot. And it's done so with zero consultation, zero heads up. Again, if you're Taiwan, right now you got 11 days of natural gas, and then you're kind of screwed. Excuse my French. And Japan and Korea are not that far behind. China, incidentally, for all the talk right now about, oh, this is a war to box in China, and they're doing Venezuela and they're doing Iran to screw China over, etc. China has been getting ready for this moment for the past 8 years. China's been building massive inventories of everything. China has spent, and we talked about this a year ago, it spent the past 8 years de-Westernizing its supply chains. So if anybody can withstand this, it is China, not Europe, not Asia, and so right now, if you're Korea, what was it, 7 or 8 years ago, the U.S. told Korea, you guys have to take Patriot missiles and the THAAD anti-missile system, and China was all up in arms and furious, and it cost Korea a ton of business in China, and there was a closet boycott of Korean goods. It was really, really damaging for Korean companies. And so, but Korea took the pain because the U.S. told them you have to have these missiles. And now the U.S. turns around and says, okay, well, we need these missiles for Israel, so give them back. And we're now shipping them to Israel. And so if you're Korea, you're like, are you kidding me? I took all this pain because you told me I needed this for my protection. And now essentially in the ranking of important allies, you're telling me Israel is way more important than you are. And by the way, if you're the UAE, if you're Saudi Arabia, if you're Bahrain, if you're Qatar, you've been writing huge checks to the US military to protect you. And right now you have the same feeling. You have the feeling of, you know what? My economy is getting absolutely slaughtered. It's getting destroyed. My refineries are blowing up. My desalination plants are being targeted. My hotels are being blown up. My tourism has been driven to zero. My airports are closed, and I spend billions on all these weapon systems. And I feel like I'm getting the best out of everything? I'm not sure that I am. And so all this to say that right now, if you're U.S. allies, it's Kissinger's old saying that, right? That to be an enemy of the United States is often dangerous, but to be a friend can be fatal. And right now, a lot of countries that had been bending over backwards to be friends with the United States, including Europe and all of Europe, are being shown that actually the cost of being a friend to the United States can be quite high. Meanwhile, China, which again was told in 2018, you're not a friend, you're not going to be allowed to have semiconductors, and consequently spent 8 years de-Westernizing its supply chain, is now in a much better position to withstand the storm.
Would it be an oversimplification to say that these allies would now look more with a friendlier gaze towards China, and also all the let's say the non-committed countries, the non-aligned countries, like the Indonesias that you mentioned, right? Wouldn't they also look towards let's say a leadership group that was easier to fathom, not so willy-nilly in how they manage global affairs?
I think what I would hope, look, I can't speak for other countries. I'll just speak for my own. I'm French. What I would hope is that we come out of this thinking a little more about our own national interest, and that friendship only takes you so far, and that if you want to be a respected country on the world scene, that means that you need to have your own military and your own independent military with your own independent weapons that you produce yourself, that you need to have your own tech supply chain, that you need, and by the way, all this is extremely costly. It costs a lot of money. And China did this, again, over the past 8 years at great cost to itself. Real estate prices went down a third. Equity prices went down 2/3 as China essentially mobilized all of its savings and pushed them into this massive effort of essentially geostrategic independence and de-Westernization of supply chain. Now, Europe could do this. We have the depth, we have the knowledge, we have the engineers, we have the universities. We could do this. And to some extent, that was the promise of Europe. I remember, so I'm part of the generation that voted on the Maastricht referendum, and at the time we were told, stronger together, we'll build. We won't have to depend on Russia. We won't have to depend on the U.S. And back then China was a non-entity. We'll be powerful by ourselves, and we did none of it. We absolutely did none of it. Now, could Saudi Arabia, along with Bahrain, Oman, GCC, etc., do it? They're starting from further afar, right? Because they don't have all the domestic engineers. They don't have really big universities, and they are starting to build them. There's the King Abdullah University in Saudi Arabia, etc. So they are making progress, but they're further afar. But when you see how China managed to do it in 30 years, it means it's achievable, it's doable. It just takes serious commitment. And by the way, one important point on this is that as you look at this Iran war, and you think, okay, if the end result of this is that different countries are going to want to be more geostrategically independent and don't want to be beholden to either China or beholden to the US and trace their own path. I think that's very bearish bonds everywhere. It means higher real rates everywhere because there'll be higher demands for capital. There won't be enough money for everyone to go around. So real rates will go higher on the back of this. If Iran, you end up seeing regime change. If the US wins this, the Ayatollahs fall, you get regime change in Iran, and happy days, we can invest there and get everything going again. That's also going to be bearish bonds because the demand for capital, the ADIAs, the ADICs, the Saudi Arabian wealth funds, etc., all these guys that kept buying U.S. treasuries and kept buying U.S. tech stocks, they're going to turn around and say, okay, fine, we're going to fund the reconstruction of Iran. It'll be like the German reunification times it'll be like times 10. Iran is 90 million people. And at the same time, they'll be reinvesting all across their own economies in Jordan and Iraq, etc. So it'll be German reunification times 10. And when German reunification happened, everybody thought, great news, I'll buy German stocks. This is amazing. And then real rates in Germany went to 7% and crushed absolutely everything, including France, including the UK. UK left the ERM, including Italy. So these big geopolitical developments can have a big impact on bond markets. Meanwhile, if this war continues and the oil price stays above $100, goes to 120, 150, 200, I don't see how that'd be positive for bonds. So you look at it, whichever outcome comes out of this, for me, it's bond bearish, and you end up with higher real rates almost regardless of what happens.
So one thing that I've heard Luke Roman say a lot is that maybe part of the motivation to do all of this is to get the US dollar to come way down so that the US could conceivably become a manufacturing factory of the world kind of a place. And of course that takes probably a couple of decades to actually do, but maybe step one is make the dollar cheaper, right? You were speaking earlier about the RMB probably being the one currency that's like way too cheap in the grand scheme of things, and the US dollar maybe by comparison is maybe way too high considering the industrial capacity, etc.
There's no doubt that the US dollar is too high. Now, I tend to think there's easier ways to reduce the value of the US dollar that doesn't involve bombing schoolgirls. There's other paths to dollar weakness that you can get there. One of them, which I thought Trump would do, again, the big anomaly in the system isn't that the dollar is too high against the euro or too high against the Swiss franc or too high against the pound. It's probably a little too high, but it's not massively too high. Again, the massive anomaly is China. And I thought that when Trump came in, he would get everybody around the table, and he would get the Europeans and the Japanese and the Koreans, and everybody would agree to pick on the Chinese. Everybody would say, you know what, China is a bad actor. They're keeping their renminbi too weak. And so let's all get together and say, China, unless you increase your currency, we're going to put 40, 50, 60, 100% tariffs, and we're all going to do it all together, and sort of force China to revalue in that way. Not to do it publicly, because of face and because China, because of its long history of century of humiliation, etc., does not want to be publicly humiliated, but to do it behind closed doors amongst adults. Um, and and I think that could have been done. There was a window of opportunity for that to happen, and Besant was talking a lot about that, doing a new Mar-a-Lago Accord, etc. I do believe there was that window, but Trump shut that window when he started to put tariffs on everybody, not just China. So now all of a sudden, instead of everybody against China, it was everybody against the U.S. And I think Trump then further alienated everyone with the stuff on Greenland, and now you've got this Iran thing. So the bottom line is, if the end goal was to weaken the U.S. dollar, I think there was better ways to go about it than bombing terror on girls' schools.
Yeah, I would agree. Jace, where you want to take it from here?
Yeah, I don't know. There's so much to think about. I mean, I'm like Louis said, right? I'm in China now. It seems I've been taking taxis everywhere, right? Because it costs like $1 for a 10-minute taxi
You
ride.
live like a millionaire. That's awesome.
Yeah, it's crazy. And then the taxi driver, he sees my wife being European, and then I've got 2 kids that look semi-blonde. And then he's like, "Oh, where are you guys from?" I said, "Oh, I'm from Singapore. My wife's from Germany." He's like, "Oh, so how long are you in China for?" I said, 3 months. And they go, "Oh, and where are you going back to?" I said, "Oh, Germany." And they go, "But why? China's the best place ever, and it's safe. Like, why would you want to go back to Germany?" And it's
Okay.
just for me, it's like I feel like I'm living in an alternative universe where 2 years ago, 1 year ago, you'd not be able to imagine this situation, right?
So,
Yeah.
on this, sorry to interrupt you, but on this, one of the most depressing things for me is, if you go to Xiaohongshu, for your listeners, Xiaohongshu is a bit like TikTok or Instagram. It's one of these social media. It's the biggest social media platform in China at this stage. And you go on Xiaohongshu, and you read the comments about people visiting Paris or Berlin or any one of the major European cities, and people talk about how it's dirty and how it's smelly and how it's unsafe, etc. Now, for me, for somebody I moved to China in the early 90s, when China was really dirty and China was really smelly, and really unhygienic. And so to see how in one generation you've gone from we Europeans going to China thinking, oh my God, it's so dirty here. People are spitting in the street, and the food markets are disgusting, and there's flies everywhere, etc. To now them thinking this about Europe is the most depressing thing ever. To see this, it's like somebody going up the escalator and somebody going down the escalator. It's extremely, extremely depressing.
And Louis, you have boots on both continents, right? You're flying back and forth all the time, so you get a first-hand view of how things are moving. And just for the audience out there, a lot of this stuff is not exaggerated, right? It really is as what people are saying on Xiaohongshu or not.
I really think it is. And when you describe what's happening in China, when you describe what's going on with Chinese cars or what's going on with Chinese tractors or Chinese trains, people tell you, "Oh, how much is the CPC paying you to say this?" And you're like, yeah, my go-to line. I'm sorry to bring up the Second World War with Germans, but my don't do it. My go-to line on this is, if I told you that the Panzer was the best tank in World War II, does that make me a and the reality is, there's things such as objective fact, but I think in the Western mindset, the view is, because it's called the Communist Party of China, it is bound to fail, because communism has to fail, right? We all know it. We all have a vision of communism dating back to the 80s of the Soviet Union and Eastern Europe, and you'd go there and people would try to buy your jeans with their worthless paper money, and so I don't think we can conceptualize something that has communist in its name but that has ended up being actually an economic success that has taken 800 million people out of abject poverty, and that is rapidly moving up the industrial value chain. Now you could say, well, they have communists in their name, but they're not really communists, and I'd agree with that. By the way, I think in many ways China is way more capitalist than we are, but the end result is. No, I don't think it's, to answer your question, the stuff you see on Xiaohongshu, the stuff you see on YouTube, etc. I don't think it's an exaggeration. I'm sure there's exaggerations. Of course, you can point to me some exaggerations, but by and large, I tell everyone you have to come visit. You have to see it. You have to visit the factories. You have to visit the cities. You have to see it with your own eyes before you judge that it's propaganda. Come over and you know what? It's not expensive. You can get decently cheap flights to come over. And once you're there, hotels are cheap, food is cheap. As you just mentioned, cab fares are cheap. And if you want to invest globally today, I don't think you can do it without at least having some kind of understanding of what is going on in China. And it's not just the manufacturing stuff, it's other stuff as well. Biotech is a perfect example where today, do you want to, if you don't know what's happening in biotech in China, can you invest in biotech globally and be successful? I'm not so sure, because you might be investing in a lot of stuff that's going to get undercut massively. So the bottom line, and I take it that a lot of people don't want to invest in China for a whole host of reasons, but burying your head in the sand isn't going to help you achieve good results. You may not want to invest in China, but you should still know what's going on over there, because whatever is going on over there, you may not care about China, but China cares about you. And so what's going on over there is going to end up impacting the businesses that you invest in. It's going to end up in impacting exchange rates, interest rates, all sorts of things.
So, Louis, a bit of backstory, right? So we had you on a year ago, and then you connected us to Jen Zhu.
Yes.
We had a fantastic conversation with. And then we had another person on, Peter Alexander, who lives in Shanghai.
Yeah, I know Peter.
And all three of you were like, just come over. And then after one of these conversations, I told Jay, like, Jay, we're doing this. Let's go. Right. And so we went last year in July together. Jason was basically my guide. Yeah. And we did exactly what you said. We visited with a bunch of people that, are friends of friends. We looked at some factories. We went to the crazy Shenzhen electronics markets, all that stuff. Yeah. And I wish I would be subsidized in some way by the CCP, but I'm absolutely not, right? I'm absolutely not. But I wanted to see.
I'm not either, by the way, just to be very clear. I'm not either, just so in case there's any doubt.
Like, as an engineer, I'm an engineer who's trying to make new tech work in the US, right? So I have zero affiliation, but I wanted to go see how other people do it for this exact reason what you said. Like, even if I'm never going to go invest there, I of course I'm just curious, right? And it's hard to overstate, like, the food, the quality, but the people, right? Everybody's working their butts off 6 days a week, 10 hours a day. That's like this, as I understand it, that's the standard, right? While in the German parliament this year, they were debating if the government should compensate employees because so many of the public holidays fall on weekends this year, right? And I'm like, and they're talking about four-day work weeks with no change in pay, and I'm like, you guys, you haven't gotten the memo. Like, they're going to eat our lunch. Like, I mean, it's already eaten, right? And and like you said, like the depth in Europe is there. There is no will, and there doesn't seem to be any competence and leadership to do any of it, right? And that's incredibly frustrating. But yeah, so I was amazed, and if I can figure out how to do business in Asia, I would spend more time there, right? It's because it seems great. There's good education.
Then you'd have to work 6 days. Then you'd have to work 6 days a week, 10 hours a day.
That's fine. I don't care.
No, I agree. No, like I agree, but it's so no. I'm sure you don't get paid by the CPC, just like I'm sure I don't get paid by the CPC. It's just sometimes uncomfortable. It's when uncomfortable truths are spoken, it's easier to to just
Yeah.
brush them away as propaganda.
Of course, I know.
Louis, I guess we've been talking for nearly an hour. Do you still have a little bit of time?
Yeah, I've got another 10 minutes or so. I think I've got to. Yeah, then I got to basically I've got the Asian markets opening, and you guys might have noticed it's a bit it's a bit choppy.
Okay. Then just a quick one, just before you go. I'd just love to hear your thoughts on AI. Like, how are you seeing it, and is it really different the way the West is treating the topic versus the East? What are your thoughts on AI?
So first, a full disclosure: I don't think I'm as much of a specialist on all AI things as others that you might have on this show, including incidentally my friend Jen Ju, who you've had in the past. She's actually I actually think she taught a class at HKU on AI. So if you want somebody really smart on that, you should reinvite her to the show. So having said this, uh, I think when the U.S. It's actually interesting because typically when there's a challenge, the normal Chinese response is to throw money and throw people at a problem. And that's what they did, for example, with semiconductors. The U.S. blocks them from semiconductors, and they write huge checks, and very often a lot of the money ends up getting pissed away and deployed poorly by the government. With AI, they didn't really have that option. When the U.S. said you don't get access to high-end semiconductor chips, then and very much on the premise that we block you from high-end semiconductors because we don't want you to advance on AI. China essentially had to find some workarounds. And so you ended up going very different paths on AI between China and the US. The US, what you ended up with, because the US, these companies had essentially unlimited funding and a totally free cost of capital, they went down the path of whoever can throw the most money at this problem, whoever can throw the most resources will win. And so they absolutely just plowed money into this. When I say they, I mean Microsoft and Google and Facebook and all the big boys. Again, China didn't have that option. Alibaba and Tencent, I mean, they did put some money in it, but they couldn't spend hundreds of billions of dollars into NVIDIA chips because they weren't allowed. And so instead, what you ended up with is solutions like DeepSeek that are open sourced, and where you try to find workarounds to some of the issues. And so you end up essentially, the way you can think of it is the American companies are trying to build the best fortresses, and they're building the best OpenAI, Anthropic. This is the best fortress. Come be a part of our fortress, pay us a monthly due, and within that fortress, great things will happen. That's the business model. I think China is essentially building Dubai. It's, you can come here, open streets. Well, Dubai before it got bombed, but it's open. Anybody can come in. Anybody can do business. Totally open city. So you got a sort of medieval fortress mentality or a totally open city. Now, what's interesting is if you look at Andreessen Horowitz was highlighting that 80% of the startups that come knocking on their door for funding use Chinese LLMs. And the reason is twofold. First, the cost. Most of them are free. And when you're a startup, you're often very, very often bootstrapping it. Number one, but most importantly, because it's open sourced, you can tailor it and modify it to exactly what your needs are much more easily. So this is essentially what the Airbnb CEO said at his last earnings call. He said, "Look, we used to be on OpenAI, but we moved to Qwen because we can." Qwen is the Alibaba model because we can tailor it to however we want. Now, so again, I'm not a huge tech guy, and I'm not going to even pretend that I am. But I find that interesting.
Yeah.
That
What about,
yeah.
but what about how this is going to impact like the economy, right? Because so Luke right now is banging the drum of saying, hey, even if just 10% of white collar people lose their jobs to AI because the system is so over levered, the whole thing's cooked basically. Like, is that something on your radar or not really?
Look, if 10% of white collar jobs disappear, there's no doubt that that's massively problematic. Now, up to now, you haven't really seen it in the jobs data. The jobs data has lately come in a bit soft, but it's also not been a total disaster. But if indeed 10% of the jobs do disappear, then Luke is right to be worried. Again, I think what you're going to see in the coming weeks and months is, as energy prices go up, as you get these supply chain dislocations, et cetera, there's a good chance that unemployment will go up. And what will happen is companies will announce, the Microsofts of this world, the Amazons, they'll say, oh, we're firing 20,000 people, and because of AI. Because then it doesn't sound, it's not because our sales are going down, it's not because our business is threatened, it's because of AI. So I think AI will be a good scapegoat for the coming job losses, which may turn out to be more cyclical than structural. But as the job losses get unleashed, it'll be very hard to know what is structural and what is cyclical. But between the cycle now, the higher energy costs, etc., and the structure of AI, it seems probable that the unemployment rate is going up from here, which is not great news.
All right. Hey, Louis, Lovis, any closing questions? If not, I think we all want to go see how the market's open.
Yeah, let's
see how much money we lose today.
Louis, thank you so much
for
absolute pleasure, guys. Good to catch up.
Yeah, hopefully you can do it again at some point in a more peaceful time.
Whenever you guys want. And Lovis, congrats on the upcoming baby. Hope it all goes well. And 3 babies is a great start. Don't stop here. You're halfway to where you need to be.
All right. That's good.
Somebody's got to make German babies. Nobody's making German babies anymore.
Nobody. Yeah, you're right. Even the Americans are slouching nowadays.
Yeah, everybody's slouching. Yeah.
Thanks so much, guys. Thank you so much. Enjoy. And one of these days we got to meet up in Hong Kong and have a coffee.
Absolutely. Sorry it didn't work last time.
It's all right.
Take care.
And that wraps up our main conversation. But we're not done yet. We're going into overtime, where Jason and I unpack some insights, reflect on what just happened, and connect a few dots. And go.
I got to turn off the AC real quick because I'm so freaking cold in here. I got like icicles growing out of my nose. It's one of the... Texas still has cheap abundant energy for now, so run the AC as much as you can.
Hope it stays that way.
Yeah, me too. Okay, well, let me just begin by saying what a stark contrast this conversation was to our recent conversation with the professor.
Yeah, but very, very different.
But both incredible, right? So Louis it's just, you can just tell that he is talking about this stuff, not once in a while when he gets on a podcast, but all day, every day. And feel really fortunate to have a front row seat, right, to how he thinks this stuff through. It's super cool. And like how incredible that you're actually calling in from China, which with everything that happened last year, the conversations we had and the trip we did together in July, I feel like is a derivative a bit of all of that as well, right? So it's pretty cool.
Well, for sure. I mean, our trip, I told you that I've been here so often, countless times, but it's always for work. And in the last 18 months, I've been lucky enough to come here a few times where I actually have time to look around. I'm not jet lagged. I'm not just in a car rushing from factory to factory. And I can actually see how normal life goes on in China, right? And it was so cool to round that picture out for myself. And I'm really looking forward to that, the 3 months I get here now.
Yeah, and you have the kids with you and Anya, which is also really cool. So you guys get to all see it together.
Yeah, I mean, yesterday we had a dinner, and Anya took a picture of the dinner to send it back to her parents because she couldn't believe that feeding 4 kids with like 7 or 8 dishes, all freshly cooked, was less than 20 euros, right? And it was delicious.
Yeah. Yeah. Yeah, whenever you send me stuff, I'm just like, this is so unfair. I can get good food here, but the quality is hard to match, and the price for quality is it's almost impossible. And you really can't even tell any American, because either they won't believe it or they just get pissed, right? Because a lot of people do realize that the super processed foods nature of American food is also like, people are waking up more and more that this is like super bad for you and making you sick. And then you could at least be like, yeah, but at least it's cheap, right? I was like, no, it's not. It's processed and it's expensive. It's horrible. So
Yeah,
the
yeah,
Americans, in a way,
and
that they're really like, to some degree, it's a rock and a hard place, right? Because it's not, obviously it's not China's fault, right? This is just how things are handled here. And I don't know. The incentive structure is such that these massive, food manufacturers make this stuff and people eat it or drink it, and maybe they don't realize that's making them sick. But then, of course, there's a medical system that's also complete crap that profits off of it, and it's almost like it's a spiral, and it's a very unhealthy spiral, right? So listening to this thing from Luke yesterday where he's like, well, what can people do, right, with the current, all the stuff going on in the world, the wars, the AI, etc. He's like, well, something that's really important is make sure you got a handle on your health, right? Because with all this going on, there's a good chance that like medical services and all this necessity stuff, the cost is just going to keep exploding. And it's like, he's completely right, and I see it exactly the same way. And I've been trying to work on my health and fitness basically ever since I've been super serious about it ever since I've become a dad. But it's not that easy to attain. Like, you have to be pretty on top of it, and you have to be very contrarian to make it work in the US. Like, there's just whole, like, there's not even certain aisles in the store. There's like whole stores you can't go to, basically, which is insane.
yeah, and one really cool anecdote we got was when we had dinner on the second day, and we went into one of these quote unquote fast food places, but it's not really fast food as we understand it. It's like a canteen where they're cooking this, you know, you scoop your own food out, but it's all looking like it's from a restaurant, right? So you want your shrimp omelets, you want your sweet and sour pork, whatever. You just put it onto a plate, and they weigh it at the end, and then you just pay per gram, right? So it's delicious, The kids were loving it. Anya's saying like, "Wow, you get all this fresh green veggies on tap, right?" And how much did it cost? And that at that dinner where it was like self-serve for 4 of us, it was $9, €9, right? And for 4 of us, and it was as much as we could eat. The kids wanted more. We went back and got more. And then a guy came and sat down next to us, and he's a delivery driver. So he's one of these guys that in China, you're looked upon as, in an urban area, you're probably the lower end of the economic spectrum, right? He's working 7 days a week, 10 hours, 12 hours a day in the cold, in the wet. But he was talking to us in English that he self-taught himself, he said, while he's on the job, right? And he was eating the same food. So to me, the miracle of China is not really, like, that's often missed, is that the average guy, the guy that's supposedly struggling, gets access to this kind of produce,
He can sit down in a warm place and have a meal that everyone universally agrees is healthy and is delicious. And I think for me, that was a really, really heartwarming thing to see, right? That this system is able to function in a way where the guys on the edge can still have access to the good stuff.
Yeah, that's really cool.
And if you can eat well, you sidestep a lot of those metabolic issues that we're starting to see in other industrialized countries, right? Because I think it's
sure.
a lot of it's to do with our food, and our food's so
Yeah.
fake now that
Well, it can range from just obesity, but it can be depression and mental health and all kinds of stuff, right?
Yeah, exactly. And what was it? We went to a supermarket yesterday. It was insane, and like the kids could not believe it. There were big aquariums with fish swimming in it, where you could choose which fish you wanted to bring home for dinner. There was pork, right? Huge aisles of freshly cut pork, and in big signs they were saying the pigs have been grown on pasture, on grass. They have we're a listed company that's selling this meat, so we cannot be faking that these pigs are not given antibiotics, growth hormones, etc., etc. They're slow growth pigs, stuff like that you would not think about when you think about China. And this wasn't a snazzy place. I'm in Suzhou, and I'm in a non-snazzy, non-premium part of Suzhou, right? So very, very middle class.
Yeah.
Anya was taking tons of pictures and sending it back home to Germany, right? The choice, and I was telling Anya, compare that to me always getting depressed walking through Netto. I was like, how do you even compare?
Oh, dude, but in Germany, it's not even that bad compared to the US. Like the food cost and the quality is, I would say, 4x than it is in not the cost relatively is lower and the quality is like 4 times better than in the US. The US is really, the thing is that the perverted thing is, of course, you can get amazing meat and amazing produce and all this stuff in the US, but you're just going to pay so much for it. That weeks worth of groceries for a family of 4 might cost you $400. And then in Germany, that same might cost you $150, and then in China it's probably like $50, and it's probably better. So that's the crazy part, man. And now you're mute. Sorry.
Yeah, sorry. I just want to say, just to put pricing into perspective, right? Like when I bought that fresh pork, the sticker price was about €5 a kilo for the good, really the top cuts, right? Or from that they didn't say organic, but they said pasture raised, slow growing pigs, right? And then I asked the guy in a supermarket, the butcher, I said, "Oh, so can you give me a discount?" He's like, is it? Do you shop in China often? I said, "This is the first time I've ever bought pork fresh in my life in China." He's like, "All right, tell you what, I'll take 20% off." So I got, €4 a kilo for healthy meat, right? This is insane.
I've never been able to bargain at a supermarket.
Yeah, me neither. There's a first time for everything. Right. I told him I'll remember him forever. The first guy ever to sell me pork in China, and he was super happy.
Nice. Crazy. Yeah. Well, what else stood out for you with Louis on our call just now?
So I've been looking at Australian coal companies myself. So it's good to get him to say the same thing without us even talking about it beforehand. Yeah, I agree with him that it's all about energy, and I think the thing that
I wouldn't say unites, but the same thread that I pull on, and looks like LVG does as well, and Luke Roman does as well, is that everything relates to energy, right? And once you see it through the energy lens, a lot of things that seem to be happening randomly globally are no longer random.
Yeah.
And it's to me, the big rotation that we're looking at now is not really, China to the US, US to China, Europe, bonds, etc. What equities to buy, is it AI or not? It's more like energy is coming back to the fore. And that's the main headline, right? Everything runs on energy. Energy is not evenly distributed. So if you've got crazy industrial output capacity, but you don't have energy, you might as well have nothing. So
Yeah.
with that in mind, how does one invest, right? And I liked what he said, that energies. What did he say? That energies, that big black. Well, what's the thing he said that can't remember his exact words, but he was saying like it's the gorilla in the room, right? Where the gravity that sucks everything in if it gets too expensive.
Yeah, I also can't. I know what you mean, but and I mean, so I wonder how does, like, if energy prices double, triple, a lot of the AI narrative also gets kind of kneecapped a bit, right? Because like that is what we've been talking about a lot already, is ultimately the bottleneck to AI, like, proliferation into everything, all the industries, all the daily life. It's really about, the bottleneck is electrons, not NVIDIA chips, right, or whatever.
Yeah,
So
yeah.
I'm very curious to see how that plays out.
I mean, if you are someone like China, where you've got 90% of your population living in the arable parts, right? And everyone's very concentrated, living in the high density areas. But then you've also got huge tracts of desert nearby, and you've got solar panels creating energy like almost for free. China, people like China or like the other countries he mentioned that can roll solar out. Solar would, I think, be able to help with that equation to offer those electrons up for cheap without needing you to cannibalize the molecules from fossil fuels that you'll need for things like fertilizer and plastics and medications and all that, right? So let's see how that goes. I mean, it's again a rush for
Yeah.
energy.
Yeah. Right. I mean, the Bahrains and the Qatars, etc., like with the Strait of Hormuz being basically closed, I mean, I don't know enough about the region, right? But you told me that your son was like, yeah, they have to go a different way. So like, what is it going to take? If enough, the thing is, energy always finds its way. Like like Doombird will say, right? Like every molecule of the stuff is going to get burned eventually. It's going to find its way to the market. So how does that pressure get relieved? Right? Like there will be a relief of some kind. And like Europe, right, relying on Qatari gas, Taiwan relying on it, etc. I guess something's gonna give, right? I mean, the price for sure, but like, I think they're gonna figure out some other route to get it out, or some other way. I
They'll all
don't
get
spend enough time on the
religion,
topic to know, but
or maybe they'll all just realize the costs are so great that if we want the world economy to get on its feet again, we have to find a sustainable security architecture that everyone's happy with, right? I mean, up till 2 weeks ago, things were
basically,
still flowing, right? Things were still flowing. It stopped flowing because certain actors decided to lob explosives at other actors, and then there were retaliations, right? So the point is,
Yeah.
if there was peace, this thing would flow. So maybe you don't have peace, but you would, for everyone's sake, you'll have to find a way for this stuff to keep flowing. Yeah, at some point you just have to, or taken to extremes, right? You start getting issues with carrying capacity. You have something like I don't know if the numbers are correct, but apparently in the Gulf countries, you've got something like 80% of fresh water coming from desalination plants. And the desal plants in Iran just got attacked 2 days ago. So if Iran retaliates like for like, a tooth for a tooth, what happens when the Saudis and the Emiratis and the Qataris don't have water? Then they can't even, you can't even run your refineries because you don't have people to run it, you know? So at some point the pain's gonna get too acute. So I think something will have to give somehow. I don't know how, but
Yeah, so I wasn't. So when Louis said that the desal plants had already been attacked, I actually didn't know who attacked who, and that's why I
think the
didn't
Iranian
dig
ones,
deeper into that. But
Iranian ones got attacked already. So, but then Iran retaliated by attacking the base where the missiles were fired from, in I think in Bahrain or in Kuwait. I can't remember. But they haven't attacked the Gulf desal plants yet, because then, you know, that would be a non-military target, and Iran's trying to play the card where they're, you know, taking the moral high ground somehow.
well, what I was gonna say about, you know, if you blow up someone's desal plant, that, I mean, to me that's as close as poisoning the well, right? Like that's a war crime. I don't know if anybody's keeping track, right? But they, I think Doomberg was saying on one of the pods, he's like, hey, they, the Russians attacked Ukraine's, what was it? It had something to do with producing heat in the winter, right? And a power plant, and they said like, well, that is a war crime, should be considered a war crime, right? Because this is like, people will freeze to death, like civilians will freeze to death because of this. I mean, in the very same vein, something like that. I mean, I can't even condemn it more, you know, harsh enough, because like, you know, even if you disagree with everything that Iran stands for, that's freaking brutal, right? To blow up a water plant.
Yeah,
I'm sure there's plenty of other targets to hit, right? That are military or that are infrastructure, other infrastructure.
yeah, I think from watching the stuff that's going on, it's a long way. Like, we've come a long way from only attacking military infrastructure, right? Like schools and hospitals and all this stuff's getting blown up now. So it's pretty horrific. But hey,
yeah,
it's like what that taxi driver said, right? Stay in China. Nobody's gonna bomb you here. I hope he's right, but let's see. It's crazy because after that ride, Anya and I were talking about it, and we're like, we've entered into that era where it's not about right or wrong. It's just whoever's big and strong, you get to feel safe. You know, you wanna, everyone congregates where the strength lies, because you feel some sort of relative safety there. Well, let's see. Let's see. Hopefully, you're gonna be traveling a bit. Maybe we can do an extra overtime. Sorry, when you're in Europe. Tell us how it's like from over there. And hopefully things quieten down
only
soon.
there for a few days.
Then maybe we can do it when you're back, and you can share your impressions.
Yeah, maybe that. And I also wanted to do I do want to do a deep dive with you about AI, because when I listened to Luke talk about it, it does freak me out, right? I am very concerned over what happens in the economy when, you know, in a super over leveraged system, when a bunch of people, not very unlike me, might lose their jobs, right? In short order. And I mean, I like Louis' comment on it. He's like, whether it'll be structural or cyclical will be very hard to tell. Generally, I'm firmly in the camp of saying, innovation so far, it's always like done stuff to the jobs market, but usually we've always been better for it in the long run. And I kind of feel like this is going to be the same with AI, but I don't see yet what comes behind it. And so my whole intention is, well, how does one ought to integrate it in their lives? I mean, as a way to defend against these structural shifts, right? So, etc. So I'd really like to do that with you on overtime. And actually, Louis saying we should ask Jen to come back on. I think that would be freaking awesome also to get her 2 cents on it.
Yeah, I would love to have Jen on, and I'd love to, pick each other's brains with you on the whole topic, because I think it's really about, hey, what if 5-10% of the people lose their jobs, right? And it's not something that we can easily just push away and say it's never going to happen, because it is happening already in some ways, right?
It is. Yeah. No, I agree. And so, I mean, I don't, I'm not as optimistic / pessimistic as like these guys saying, oh, in 12 to 18 months, all the white collar jobs are useless. I'm like, maybe. But the thing is, there's lots of technology out there to make all kinds of jobs irrelevant. And that doesn't mean that it has proliferated into the market, into the economy, right?
Yeah.
So there's still going to be tons of companies who are just not going to use it because they don't even have a website, right? So what the F are they going to do with an AI agent? so from that perspective, I'm relaxed, right? But the thing is, right, just like with energy markets, right, the price is always found on the margins, right? So even if just 5 or 10% of white collar people get laid off, not all of them, it can still blow up the whole system. So that's the thing.
Yeah.
To
another way maybe people can look at it as through the lens of maybe not people losing their jobs, but maybe white collar workers will just not earn as much as they used to.
Yeah.
Right.
Right.
You might still keep your job, but maybe you go down a few rungs in the ladder of valuable people in society, right?
Yeah.
It used to be that you had access to capital, which was behind a screen. Therefore, you were able to do jobs that paid well.
Yeah.
Maybe it just means, hey, someone that's using his hands, getting dirty, greasy hands at the end of the day, or wood splinters in his fingers, maybe that guy's going to get paid relatively more compared to the guy just Control C on an Excel sheet, right?
Yeah, right.
Because
Yeah, anyway,
I feel, in Australia, my cousins, one of them's a lawyer and another one's a builder, and the builders buying or selling houses, right? And the lawyers wondering how to afford her first house, right? So maybe it's already been happening. We just need to be more aware of it. But yeah, let's get Jen on, talk to her, and hopefully we can bring Luke on at some point soon, and then he can expound on it too. Maybe we get Jen on first, and then we get more educated on the topic, and then see what Luke says.
Yeah. All right, man. Well, enjoy it. You just started your day. I'm at the end of mine, so have a good rest of your day.
Yeah. Hey, I had so much fun, Lovis. Thanks again, and sorry about the technical issues. I'm not sure how to get that fixed while I'm here, but maybe I have to have more mobile phone podcasts.
I'm sure you'll figure it out. Maybe there's a mobile hotspot or something.
All right. I'll catch you later.
Good
Have a
job.
good evening. See you, Lovis.